The world is witnessing a dramatic power shift. The energy landscape is evolving at an unprecedented pace, driven by technological advancements and strategic investments. China's influence is expanding, particularly in the crucial energy sector. This is reshaping geopolitics. It is happening quietly. It is happening quickly. With each new pipeline and power plant, China is weaving a new Silk Road, one that is paved with energy infrastructure. For decades, North America has been an energy powerhouse. The vast oil fields of Canada and the extensive natural gas reserves in the United States have long been the backbone of the region's energy dominance. The United States, with its vast oil and gas reserves, held sway. But times are changing. The once unchallenged dominance of North American energy is now facing new competition. China, through strategic investments and shrewd diplomacy, is carving out a dominant position. By investing heavily in North American energy assets and forging international energy deals, China is positioning itself as a key player in the global energy market. This has profound implications for the global balance of power. The energy sector is not just about resources, it's about influence and control. As China strengthens its foothold, the geopolitical landscape is being redrawn. This shift didn't happen overnight. It is the result of years of strategic planning and investment. Historical energy trade documents and timelines reveal a pattern of deliberate moves aimed at securing energy dominance. It was driven by a confluence of factors. Market trends, technological advancements, and strategic investments all played a role in this transformation. Some were deliberate, others unintentional. Unintended consequences of energy policies and unexpected geopolitical events also contributed to the shifting dynamics. But all contributed to China's quiet rise in the North American energy landscape. Chinese energy companies are now a common sight in North America, and Chinese-funded pipelines are becoming integral parts of the energy infrastructure. Understanding this change is crucial to navigating the complexities of the 21st century. As we move forward, the interplay between energy and geopolitics will continue to shape our world. Staying informed and adaptable is key to thriving in this new era. In 2018, the Trump administration imposed tariffs on Chinese goods, marking a significant escalation in the trade tensions between the two largest economies in the world. The primary goal of these tariffs was to protect American industries, particularly manufacturing, and to reduce the growing trade deficit with China, which had been a point of contention for years. However, the unintended consequence of these tariffs was that it pushed China to diversify its supply chains and seek new trading partners. In response, China looked north to Canada, a country abundant in natural resources and eager to find new markets for its exports. Canada, which was also facing its own trade tensions with the US, saw this as a golden opportunity to strengthen its economic ties with China. As a result, China became a major investor in Canadian energy projects, pouring billions of dollars into the sector. These investments included the development of oil sands, the construction of pipelines, and the establishment of liquefied natural gas terminals. The investments were mutually beneficial, providing China with access to much-needed energy resources and giving Canada a reliable buyer for its exports. For China, securing these energy resources was crucial for sustaining its rapid industrial growth and meeting its ever-increasing energy demands. For Canada, the partnership meant economic growth and job creation, as well as a diversification of its export markets. This marked a significant turning point in global trade dynamics, as China gained a strategic foothold in North American energy. The strategic investments allowed China to establish a presence in North America, which had long been dominated by US interests. Meanwhile, the US, preoccupied with its own internal political battles and economic challenges, seemed largely oblivious to the significant shift happening right next door, a shift that would have long-term implications for its influence in the region. Canada's energy sector, for long reliant on the US market, was facing challenges. The US, through fracking, had become energy independent. Canadian oil, particularly from the oil sands, was expensive to extract and transport. This made it less attractive to American buyers. China's entry was a game changer. Chinese companies invested billions in Canadian energy projects. They provided a much-needed lifeline. This influx of capital breathed new life into struggling sectors. It also gave China significant leverage over Canadian energy policy. This new partnership went beyond just buying and selling energy. Chinese companies acquired stakes in Canadian energy firms. They gained seats on boards of directors. This influence allowed China to shape the direction of Canada's energy future. The Trans Mountain Pipeline is a critical piece of infrastructure. It carries oil from Alberta's oil sands to the Pacific coast. From there, it can be shipped to Asia. The pipeline's expansion became a political football in Canada. Environmental concerns clashed with economic interests. Initially, Kinder Morgan, an American company, was behind the expansion. But facing mounting opposition and regulatory hurdles, they decided to sell. Enter China. Through its state-owned enterprises, China saw an opportunity. The Canadian government, eager to get the pipeline built, approved the sale. This gave China effective control over a vital energy artery. It also raised concerns about foreign influence in critical infrastructure. The implications of China's energy play are far-reaching and multifaceted, affecting not just the global market but also geopolitical dynamics. The United States, for decades accustomed to being the dominant player in the energy sector, now faces a serious challenge from an increasingly assertive China. China's growing influence in North America undermines U.S. leverage, making it harder for the U.S. to maintain its traditional stronghold. Firstly, it reduces America's ability to dictate energy prices on the global stage, a power it has wielded for many years. With China emerging as a major buyer, Canada and other energy producers now have more options, diversifying their markets. This diversification weakens U.S. bargaining power, as these countries are no longer solely dependent on American markets. Secondly, it creates a strategic vulnerability for the United States, as energy security becomes more complex and less predictable. China now has a significant stake in North American energy security, which could influence political and economic decisions. Thirdly, it weakens U.S. influence in the region, as China's presence grows stronger and more pervasive. As China's economic clout grows, so does its political capital, allowing it to forge new alliances and partnerships. This could lead to a significant shift in alliances and partnerships, eroding U.S. dominance and reshaping the geopolitical landscape. The U.S. can no longer take its position for granted, as the balance of power in the energy sector continues to evolve. China's strategic investments in North American energy have raised concerns about U.S. energy security. While the U.S. has made strides in domestic production, it still relies on imports. China's growing influence could disrupt traditional supply chains. Furthermore, China's control over key infrastructure like the Trans Mountain Pipeline gives it leverage. In a geopolitical crisis, China could use this leverage to its advantage. It could restrict energy flows, driving up prices and causing economic damage. The United States needs to reassess its energy strategy. Relying solely on domestic production may not be enough. Diversifying supply sources, strengthening alliances with reliable partners, and investing in renewable energy are crucial steps. China's rise in North American energy is a microcosm of a larger trend. The global balance of power is shifting. The unipolar world, dominated by the United States, is giving way to a more multipolar system. China is challenging the existing order. This new world order will be defined by competition and cooperation. The United States and China will be the key players. How they manage this relationship will determine the future of the 21st century. The North American energy landscape is just one battleground in this larger geopolitical struggle. The stakes are high, the outcome remains uncertain. One thing is clear, the world is changing, and the old rules no longer apply.